Welcome to honeystocks.com, and today's video is about earnings season and how to play it successfully. Now, before I get into this, please, as always, just pause the video, just make sure you're comfortable with that. There's not any recommendations here, this is just opinion. So, what we need to do come earnings season is really just avoid the beatdown. Now, what the beatdown really is you will take your position in the run up to earnings generally, maybe a couple of hours beforehand, and the following day that stock gaps down 10, 15, 20%. You take a loss and there's nothing you can do about it. That's what I would call the beatdown. Now, the one thing that we all understand about the stock market is that it's consistently inconsistent. There's nothing we can do about that. That's just the reality of the situation. The stock market doesn't care about our little position. It doesn't care about our technical analysis. We just have to understand that we are not in control of the situation, and Wall Street is 100% in control. And what I'm going to do is I'm going to share with you a couple of rules that you can implement that will help you to navigate earnings season with a bit more safety. And I'm also going to share with you an incredible strategy that will help you to make more profit in the stock market at earnings season. So, number one, we don't want to be the dumb money. When it comes to earnings season, you absolutely need to proceed with a little bit of caution, and you need to have some rules in place. Now, as I said a second ago, I'm going to share with you two rules that I find work for me. They work for my risk tolerance. What I would always suggest, that I would never suggest for you to follow what I do blindly. I would suggest for you to work out what your risk tolerance is and to have your own rule set in place. And for me, the first rule that I have come earnings season is, in order for me to hold through a position on a stock come earnings, I need to be at least 10% in profit on a stock in order for me to be able to hold through. The reason I have that in place, so what that essentially means is, if I have a position in a $100 stock, I need to be up at least to $110 in order for me to hold through earnings season. That's just the logical approach for me, and like I said before, it suits my risk tolerance. Now, the reason I have that in place is really for the simple reason that a lot of the time come earnings season, we observe stocks that report good earnings, but for whatever reason, Wall Street will still decide to tank the stock. And this is what I mean by saying that, Wall Street is 100% in control of the situation. Our little position means absolutely nothing. So it doesn't mean if our analysis is bad or anything like that. It just means that come earnings season, we are not in control. So if we're not in control, we need to have some rules in place that protect and limit any downside, because capital protection should always be the number one priority, and good profits always follow good capital protection. So for me, having that 10% rule in place just means that I've got a little bit of a safety net. It just means that if the stock does decide to gap down, 15%, then the damage is a bit more minimal. The other way that you could do it is simply not participate. You could absolutely just take your profits off the table and look to just take advantage of the information that's presented to us by the company and by the actual earnings. So that's rule number one. Rule number two is, I will not take a position in a stock if earnings are due within 7 days. Now, the simple reason for that is, going back to rule number one, in the 7 days in the run up to earnings, generally the stock will get a little bit more volatile. I think that's probably the first thing to say. And logically, within 7 days, it's unlikely that the stock is going to advance 10%. Yes, it absolutely could. I understand that it can. Anything is possible. But generally speaking, most of the time, in the 7 days in the run up to earnings, you just will not get that 10% move. It's a bit more volatile, It's a bit more stressful, and I don't like stress in my life. I don't know about you, but absolutely, those are two rules that I feel like are logical, and they've helped both myself and my group enormously. Now, the one thing obviously we don't want to be is we don't want to be playing on Sesame Street. I think once you understand that it's a Wall Street game and it's not a Sesame Street game, having rules in place will help you to maybe participate along with Wall Street, shall we say. We can never beat Wall Street, and our little position means absolutely nothing, as I've said before. But the one thing that we don't want to be doing is we don't want to be playing with Vegas odds. And I said to you that I was going to share with you a very effective strategy that you could look to implement come earnings season. And yeah, I'm going to go over this just now. Now, what we are essentially looking for come earnings season is the Wall Street discount. Now, what the Wall Street discount really is it's a stock that's trending. It's on a clear move to the upside. What we're really looking for, and this is so simple in its simplicity that I cannot believe that this is not the standard approach for everyone. And what we're looking for stocks that are moving, but we want stocks that report their earnings, they report good earnings, but Wall Street finds a way to tree shake everybody out of their positions. Now, when that happens, it offers us opportunity. And when the opportunity is offered to us, we can look to take advantage of it. And we are just simply looking for areas of support that price is likely to rebound from. And we're looking to just action a position. Now, as we can see here, now I think the ticker for this one is TEAM, TEAM. You can go back and have a look at this, but you can actually observe this a lot of the time come earnings season. And certainly we found here, we've got a bit of support here at $90. A couple of months later, $90. I actually think now, this at time of recording, at the end of June 2019 here, that this stock is now trading at something like $130, $135. So that's how we look to take advantage of these situations. We just simply wait for the Wall Street discount. We've already mapped out where the support areas are likely to take place. We're waiting for good earnings, and then we just jump in and then we piggyback on the back of that. Now, if you are out there trading options and you are looking to take advantage of trends for weeks, this is not a day trading strategy. I would suggest this is more of a strategy that you can implement over weeks to months, which is really what a trend following style is, where we're not in this for $1 or $2 moves. We want to be in this for $20, $30, $50 moves. And that's certainly a strategy that you can use in order to navigate earnings season and trade it a little bit more successfully. Now, if you've enjoyed this video, please do subscribe to our YouTube channel. Let us know in the comments if this has worked for you, if there's any stocks that you're looking at the moment, if there's any areas of the stock market that you feel like we should be looking at. Please comment below, give us a like, and if you are somebody out there that does struggle a lot with your trading, if you don't have consistency, if you're a complete beginner, feel free to go and check out our website, honeystocks.com, and we'd be love to speak to you. So thanks very much for watching. If you've stuck around to the end, from the bottom of my heart, thank you very much, and maybe we'll speak to you soon. Thanks.